Welcome everyone to another week of the None of Our Businesses YouTube show and podcast, where we talk about this week's news from an accountant's perspective. It could be business news, accounting, or tax items. Anything's on the table, but as always, it's from the perspective of accountants. With me as always, Mark Pallardy, AJ Wheeler,
how's it going?
Charlie Zygmunt, and joining us for the first time and for future shows, Jack DiMatteo.
Hi all.
And I'm your host, Ty Carr. To get us started today, let's get started here with AJ.
All right, thanks, Ty. So our first article actually comes from CNBC, and it's from one of our more favorite entrepreneurs. Bill Gates says that more than 50% of business travel will disappear in post-coronavirus world. So he's estimating, in a think tank, essentially, he's estimating that 50% of business travel and over 30% of the days in the office will go away in the pandemic's aftermath. And he said, moving forward, he predicts that there will be a very high threshold for conducting business trips, and there will always be a way to work from home. Now, he did kind of elaborate that on that a bit and kind of said that it would depend on your industry. And he's talking about overall large business, of course, and probably more tech-centered businesses. So you're not thinking of like a brick and mortar kind of sales operation being remote or whatever. But I was just wondering, I thought it was interesting. We've talked about it on the show before. Do you think his like numbers are kind of on track there? Or do you think that it's even more or less than probably what he's estimating?
Well, I was surprised that it was as much as 50% that somebody was going to come out and say that. I mean, I like the idea of working at home. I like the remote workplace concept. I think it's good for our business. So I'm encouraged by that. I'm encouraged by somebody who's looked at this thinking that that's the case. That's my input.
Well, business travel's one that's kind of near and dear to me because I spent the better part of the last 6 years really supporting business travel for a global company, and I'd watched how it got decimated last year. I definitely think he's right in the direction that you're going to see some reductions. I don't know when things level off if they'll be actually that deep, because I do. If somebody technical, an office person, somebody that could work from home, that's fine, but I hear all the time from sales forces that, they don't get, if they cannot get in front of people, they have a hard time making sales. So there's definitely going to be a reduction. Don't know if they'll be quite that steep when things level off.
Yeah, I'm just curious where Bill Gates is getting this number, and I have to play maybe the devil's advocate a little bit and say, is this because he is founder of Microsoft and is kind of invested in Teams and some other products that help us work from home, maybe help boost his former company a little bit? Not sure. Maybe that's a little bit of a pessimistic view, but who knows what it's going to be. I think it's moving in that direction, and that's what's clear.
Interesting you say that, because a footnote to the article is actually a Microsoft executives have predicted that business travel will make a rebound. And there's actually a quote from the executive vice president on Microsoft's worldwide commercial business. And he says that we believe that as we return to the skies, the travel routes we've had will resume at the level they had before. So I think he's kind of at odds with, even Microsoft themselves on this. So it's interesting. But I think to Jack's point, it's probably more related around sales and probably partnerships overseas that need probably face-to-face interaction as opposed to a Zoom call or, a conference call or something like that. So that is interesting. Charlie, you got another article for us?
Yeah, I've got one we can talk about. So I think kind of what happens in your article will depend largely on how quickly we can get out of this kind of coronavirus world. And so I found an article in Business Insider called Hospitals Around the U.S. Are Panic Buying Hyper Cold Freezers in Anticipation of Pfizer's Coronavirus Vaccine. And so what's happened is that Pfizer has developed a vaccine that is apparently 90% effective in late stage human trials at preventing coronavirus. And so basically the tricky thing about it is that most vaccines are required to be stored around 36 degrees Fahrenheit, but this one's negative 94. And so people are panic buying these cold freezers, these hyper cold freezers. And basically, I thought it was a really interesting kind of budgetary problem to think about because it's one of those things that nobody knew that the cost of this technology would be such a big input into, what governments are looking to spend their money on. So yeah, I'll turn it over. What do you guys think about
Sounds
that?
rough, actually. No, actually, what I was thinking about when I read this article was actually how many people are I think are going to line up for the vaccine, and I'd kind of like to get a poll maybe from you guys. I mean, I know once it's available, I think I would take it right away, but I've heard actually a lot of people kind of on the fence about it. So I'm wondering, what the appetite is for that, especially because I don't think it's going to be cheap, especially given the conditions that it needs to be stored in and the limited quantity it's going to be in. I'm wondering what the access will be like. If they have to, what you said, minus 90 degrees Fahrenheit is what it's got to be stored at.
Yeah, it was negative 94 degrees.
That's crazy for it to be that cold. You can't even, I mean, dry ice and stuff, I mean, it's not just going to happen like that. I think they're going to have, traveling cold freezers and all that. But yeah, I'm wondering, I guess what the group's pulse is on the virus, on a vaccination shot is.
I think you're going to get split down two camps. I think you'll have the people that'll rush right out and get it, but I think you're also going to have just as many people are going to wait and see. It's almost like masks. You have people that'll, hey, you better wear your mask. You have the other people that completely disregard masks, and I that split's probably going to be about 50-50, I would guess. Like I say, I think a lot of people are going to take a wait and see attitude to it. Just my opinion.
It's also good to know that consumers aren't the only one that go panic buying. These guys have deep freezers lined up to be bought. It's not just toilet paper and paper towels for the masses. It's also deep freezers for hospitals.
Yeah, my favorite part of this article, your vaccine question notwithstanding, AJ, my favorite part of this article was when the CDC instructed hospitals in August not to purchase the freezers because everything was under control and they were going to handle it just fine. As we've seen with everything else that the CDC has rolled out, there have been plenty of tests, there have been plenty of everything else that we need as directed by the CDC. So of course it's going to go the way of toilet paper, and all of a sudden everybody's purchasing freezers. And I don't know. It's just it's cyclical, and it seems to go in this direction. And if the vaccines work, I think I'll do it. But I want to make sure that there's efficacy, and frankly, I don't want to be the first one out the gate. I would rather let the people who need it the most get it first, and then maybe be our guinea pigs. No, that sounds a little too cynical. All right, I got another article, and this is a kind of a mixed blessing. So for those of you tax preparers out there, the IRS, from Accounting Today, the IRS is investigating fewer tax preparers for fraudulent activity. So I guess if you were a tax preparer who was concerned that the IRS was going to be looking after your work, there's less of a likelihood now that that's happening. But it also, now that they've made this information public, it also could lead to more cases of tax fraud. So I think the article kind of explains that part of the reason that the investigations are down is because there are people at the IRS who are retiring, and the baby boomer retirement at the IRS is starting to happen. So this is a training year, if you will. But at the same time, we've also got the coronavirus, and there's not a lot of in-person audits happening. But I'm just curious what you guys think, because obviously over the past few years, the appetite for funding the IRS has gone down in this administration, and we are pretty sure a new administration is coming in January. So do you think this is going to turn around? Do you think it's important? What are your thoughts?
Actually, it's funny you brought this article up. I saw a couple very similar to this, and actually the same article, and I was going to post them. Mark beat me to it. What I found interesting was, though, that it's kind of like the old traffic radio morning guys that would tell you about speed traps. Well, what's the use of telling somebody there's a speed trap there if they're just going to report it on the morning drive time news? Everybody knows it's there now. Who the hell's going to speed through that area? So I imagine it's the same way. Like, we're not going to investigate that many tax preparers for these frauds if we don't have the manpower to do so. Does that just turn up all the questionable tax preparers out there to start pushing through iffy deductions and sketchy kind of tax planning that goes on? I don't know if it curbs it, or if there's an explosion of that happening. Hopefully, the ethics of a personal, or of somebody that's in that profession would keep them from doing so. But I mean, we've had accountants behaving badly on this podcast before. So I don't know if that's like, if them laying off the gas pedal of them going after these people will curb that or make it explode, or, like have an explosion in those kind of situations. I don't know. I think it's absolutely vital that they fund the IRS. I mean, you're talking about taxes, and lower spending is the only way the government can balance a budget. You need money coming in, and the collection of tax revenue is vital. And the IRS, as much as everybody hates them, serves a pretty big purpose, to fund America essentially through the tax regulations and collecting taxes. And so there was another article that I saw that they're going to increase or start coming after filers that have not filed but are on record of making over a certain threshold of money. So I think, all of this is important. And the fact that, like, I think the new administration coming in hopefully takes up this fight. I mean, I've talked to previous people that have worked at the IRS, and the funding woes over there are not just recent. They go years and years and years of being underfunded, understaffed, under budgeted period. So hopefully this turns around, and hopefully we see, an increase in funding for that area.
Yeah, I guess I kind of have two different views building off what AJ was saying there. I think that I think CPAs as tax preparers, and not all tax preparers are CPAs, but CPAs as tax preparers are generally a fairly low risk group when it comes to fraud. And so if you're basically trying to prioritize your resources, if you're in the IRS issues and you're kind of going to spend it where you're more likely to have problems, I think basically relying on the professional standards and the profession itself to some extent makes some sense. I mean, I think what I wish they could do, I don't know if they do this or if it would even be fair or legal to do this, but it seems like you could probably stratify the kinds of tax preparers there are, and in order to figure out kind of which ones are higher risk for being the ones that might commit fraud. And I don't know if there's any data available on that to the IRS to look at. In terms of, and I don't know the truth of that either, right? But it'd be interesting to know, for example, you've got EAs, you've got licensed tax preparers in some states, you've got your lawyers who can prepare taxes, and then you've got your CPAs. And so it'd be interesting to know, if you were to categorize them that way, if one group actually is more likely to commit fraud than another, and the IRS could prioritize resources that direction, kind of thing. Or it may be that certain geographies, tax preparers are more likely to commit fraud than others. It may not be based on the kind of license they have, but maybe on the area of the country they're in or something. Who knows? But it seems like that would be one way to kind of potentially optimize resources and how they go about that. I'll make a separate comment about AJ's point about the IRS needs to have resources. I think from somebody who's been a tax professional and advisor who kind of plays in the tax game, so to speak, we want a strong and robust IRS because, and really, I want to say this actually not from the standpoint of, it doesn't really matter my background in tax, being a tax advisor, really just as thinking about it from a tax policy standpoint. It's all well and good for us to debate left or right politics on tax policy, but what does that matter if people aren't actually paying taxes under the rules as they are anyway, right? And so all these debates, these political debates that we have about what the tax rate should be for corporations or for individuals or whatever, kind of go by the wayside if we don't have a way of collecting the taxes based on the laws as they exist anyway, right? So in order to really make the debates that we have, those political and those wholehearted debates that we have as a country about tax policy, to put any context or meaning to them, we need a strong IRS that's going to enforce the rules, whatever they actually happen to be. Otherwise, these debates are meaningless. That's kind of my view on that point.
All right. I've got our next article here. So this is from Small Business Trends. 36% of Americans won't move to rural areas due to slow internet speed. So this is kind of I guess for lack of a better word, a response to all the articles that we've had recently on the podcast where it says everybody's fleeing big cities, San Francisco's dead, LA's dead, everybody's moving to small town America because they can work from home now. But in this article, what they're saying is the real limiting factor that is, that in this survey that they did by satellite internet, said that some 36% of Americans say bad or limited internet access is preventing them to move to rural areas. And I think we've stated that on the podcast before when we're talking about, this mass exodus out of, San Francisco or these large metropolitan areas, that one, the reason that you move to a large metropolitan area is for the nightlife and all the amenities that happen in a large city. But what this is stating is if you can't do your work online living in the sticks, then there's no reason to move there, So I guess I found it kind of, the other tagline here is 54% of Americans now rely on internet working from home. And I actually thought that was kind of a low statistic. I thought it would be closer to the 80-90% range. So I kind of found that ironic, or I guess surprising fact in the article. But I'd kind of like to get your guys' take. I mean, I know we've talked about in the podcast before about like Starlink, so I don't know if that'll change anything. But do you guys find the percentages on point, or do you think maybe the article has something here?
Yeah, I found that surprising too, just about the percentages, because it did seem like it would be higher. The other interesting thing is I can say from personal experience, I know a colleague who has moved out to a rural place, and that internet has been a constant ongoing challenge for him. And so I think that's a very astute kind of observation there. And I think as more people start to go out into the boonies, they're going to have a harder time being able to just do their jobs out there with the internet connectivity. What do you guys think?
I'm not sure it's related. I mean, to me, it seems like a stretch, and it's kind of interesting because this is kind of a subject that's near and dear to me. I'll tell people I'm living outside of Cleveland. There was a time when Cleveland was the 5th biggest city in the nation, Cleveland proper, and people moved out of the city in droves, but they didn't move out to the boonies, so to speak. They moved out to the suburbs. Metro Cleveland is still, I think, the 15th biggest market in the country, but I don't think Cleveland proper cracks the top 50. So I don't see, and then it's very interesting because if I drive an hour from where I am right now, it's farm country. It is the boonies. It is the sticks, and I just think that's a completely different lifestyle choice. That if you most of the time it's people that have grown up, they don't know any better. They live in small towns. They're kind of used to it. But I don't know of too many people that actually do that by design because let's face it, most of us, COVID aside, at some point, most of us are going to have to go back in an office at some point in time. I just think it's a lifestyle choice. And I think they would have made that choice years ago with having nothing to do with technology, if that's really where they wanted to live.
Yeah, I think you bring up some good points, Jack. I think my curiosity for this, well, obviously, if you listen to us a few weeks back, we talked about that better than nothing internet that was from Starlink, which kind of shows you that rural still has a long way to go. But my curiosity is, like, what do some countries like South Korea, where internet is smoking fast, do they have the same level of internet connectivity in rural areas, and are they seeing this movement as well? I think if we were to look at countries where internet was good everywhere, maybe a smaller country, are those, we might be able to see, or at least compare, is the rural move internet based, or notwithstanding, if that's not a factor at all, would they move or would they not? Next article, I think is mine.
You go ahead, Mark. You got this one. What you got for us, buddy?
Cool. My next article is about Apple, which The Verge put out an article this week saying that Apple's going to reduce their App Store cut to 15% for most developers starting January 1st. This I found interesting because traditionally, since the App Store has started, Apple has usually charged 30% commission on its App Store. And then in the past few years, they've gotten quite a bit of pushback. I know in maybe the past 6 months, there's been a real battle with the company Epic and Fortnite because they didn't want Apple collecting 30% of all their revenues coming through the game Fortnite just because it was on iOS. And so then all of a sudden, other countries, the European unions started looking at Apple and saying, some of these fees were a bit too high, and lawsuits started to ensue. And now all of a sudden, out of supposedly nowhere, Apple has, out of the kindness of their own heart, decided that any app developers who are making under $1 million a year on their apps will only have to pay a 15% commission. Obviously, I think there's a vested interest in Apple to kind of not have other governments pushing too hard, or to have regulations come into place calling them monopolistic. But I'm curious what you guys think about this move on Apple's part.
Yeah, I thought this was an interesting move, and I've kind of been really interested in this because, it's not like Epic good, Apple bad. The reason that this lawsuit is going on, it's really like infighting amongst the giants, really, if you think about it. And the funny thing that Apple did here was it's almost like they thumbed their nose at Epic, because what they did was they provided a cut for the smaller app store people. And now, although all those small app developers make up only 90 or over 90% of what is offered in the app store, what's funny is the revenue percentage that Apple gets, it's only a very small, like 15 or 20% or something like that of overall revenue of the app store comes from all these small developers. And the rest of the app store cut comes from all the big people, you name it, EA, Epic, all these other provider or, large companies that do well over $1 million in revenue per year for these apps. So I'm wondering, I guess this leaves it open for workarounds. Like, do you have shell companies that, Fortnite is now put out by Epic 2 or something like that does less than can they get underneath this $1 million mark to keep the 15% cut? I don't know. But I also think that, this is almost like a PR move almost, I think, by Apple in their quest to kind of smooth over this Goliath that the App Store is, and the amount of percentage that they take. And it'd be noted that Epic in when they opened up their Epic Game Store, kind of tried to undercut Steam at the same time for game developers, that the percentage of revenue that they would take for you listing their game on the Epic Store versus like on Steam was, the same kind of deal. Steam charges 30%. They undercut Steam at 15%. Everybody's like, wow, Epic's such a great guy. But then they started releasing all these, exclusives for the App Store. So it's really this weird, like Apple and Epic kind of go through this weird PR battle of throwing out percentages to try and make themselves look like the good or bad guy, or them, they're the good guy, the other guy, the bad guy. But really it's all this lawsuit and posturing by the companies, I think, that is really super interesting to see how it goes down in the social media sphere and how people react to it. I think is really the interesting part of the story. Mark and I are the only gamers in here that like are up on it. Charlie, you got another article for us?
Yeah, I've got another one we could talk about. So I've got kind of a weird one. In USA Today, I found an article that said Wegmans drops Chaco coconut milk after PETA's alleged allegations of forced monkey labor. And so what's going on is that there is a brand of coconut milk that is made in Thailand, and apparently part of the production process in this coconut milk is that they use monkeys to collect the coconuts. And so basically, I thought it was really interesting because, as you're going through like accounting school, you learn about all these different kind of ethical questions that you'll learn throughout your career. And so, but it's like really interesting to think about what boundaries there are to that question, because, on the one hand, we look at that and we think that it's just ridiculous because we're talking about kind of like slave labor kind of a thing here. But then we think about the fact that like cows produce milk constantly and we keep them in an environment designed to do that. And that's okay. That's kind of, a normal thing. And so I thought it was interesting to just kind of, ruminate on those differences and see if you guys had any take on this.
Well, yeah, you just gave me loads of fun stuff. I mean, you talked about cows and then ruminating in the same sentence. So that's great.
Perfect.
And then, just considering the fact that we often say in accounting, I guess another business too, that a task is so easy a monkey can do it. And here, in fact, that is the case. We have found where the monkey is doing it. So yeah, that's it for me. That's all I have to say. But
I'm just saying, we've talked about the rise of AI on this channel before, and I'm just wondering, if the monkeys rise up like Planet of the Apes and they're getting coconuts out of the tree and they act like Caesar in Planet of the Apes and they're just like, no, and turn on their masters, and start throwing coconuts at them. I'm wondering where this leads to. I mean, I think you kind of need to give the monkeys some kind of emotional, financial, and food support for this forced labor if you're going to have them in there. I think I'd be all for buying this coconut milk if these monkeys were treated correctly and, with fair labor laws. I'd be all for it,
I think that when that happens, I hope they realize all the good PR I brought to this issue and how I really brought it to the forefront of discussion. And so, and take it easy on me.
Absolutely. And I probably, as the only vegan on this podcast, I will say I highly support the monkeys. And I think the only solution is a callback from last week that the monkeys should become independent contractors and decide when they should be working and not be told via slave labor to do it. Charlie, you got another article for us?
Yeah, I've got another one we can talk about. So in Accounting Today, I found an article called "A Focus on Advisory Services Gave Firms a Leg Up During Pandemic." And so this is more focused on kind of accounting firms and advisory firms. But the idea of the article is that accountants who chose to focus on providing kind of perennial services, year-round advisory services, as opposed to seasonal tax-based services and that sort of thing, found themselves more prepared for the changes that took place when the pandemic took over. And so I want to get you guys' take on whether or not, it seems like I may be preaching to the choir here, but do you guys agree that this differentiation of focusing on advisory has better prepared firms to be able to weather the pandemic?
Well, absolutely. I mean, the feedback I'm getting, and I've talked to several firms, is the fact that with the streamlining and the software and everything else that goes into the tax code, tax work has been slowly disappearing anyways. What's kind of interesting about that article, it's been my experience that this year was kind of tough on project type work, but if they were already engaged with clients as part of their advisory team, going to them for analysis and ongoing things, actually working as part of the organization, not just seen as this is a project, this is a one-off. If they were actually part of the fabric of the company's management team, providing those monthly advisory services and reporting and feedback and things of that nature, that would, that's the absolute perfect thing to do with COVID, because if they saw something as a discretionary expense, it went away soon after COVID. If they saw you as part of the ongoing fabric of their team, you were perfectly positioned to keep billing and have ongoing work. But the feedback I've been getting is that the accounting firms more now than ever are trying to diversify and get away from the tax work and into the advisory services, because a lot of the tax work is going away anyway.
Well, and I think the key to what Jack said there is that firms that had already offered those services are winning. I think, it's a cautionary tale if you're like a boutique kind of seasonal tax preparing firm. If you just decide you're going to start offering advisory services out of nowhere and have no plan around it, that can be a recipe for disaster. And I think firms need to take a strong strategic look if they're going to do like outsource accounting work or advisory services, and have a plan about how those are going to be implemented and how they can help their clients and bring value to them, as opposed to just, sure, we can do that, and kind of jumping into services that they're not equipped to do and have training to do. So I think the caveat to that is that, these firms need to have a plan in place and then have resources behind it and training behind it to make this happen. And especially if it's a new area of business that firm's going into, that they need to invest not just money, but resources, human capital into it as well, and having people available to offer those services and show the value that can be brought to a client.
Yeah. And I love that you brought this article, because it gives me an opportunity to speak again about kind of our experience in TCA and what we do, and what we see with operating businesses in this regard, because we work with small businesses doing financial planning, and at our core, That's the core of what we're doing with clients, and we were doing it with clients before COVID. And the thing is larger businesses, they all do this, right? There's an FP&A function to larger businesses. But what we see in the small business world is there's this great divide. There's those that do it and those that just don't do it, and because they haven't seen how to utilize it very well. And the ones that don't do it, it's very difficult when I'm talking to them to explain what we do, to explain the value of it, because especially if they've operated a business for a long time and never done it, they've never done real financial planning in the business. It's hard for them to really grasp how it would help them, or how it would be better in terms of how they manage their overall business. And I think COVID really instigated or inspired some of those who were on the side in the small business world of not doing it, to then suddenly the light bulb come on and realize, oh yeah, actually planning our cash flow out and having a format for thinking through the different scenarios would be super helpful right now. And for our clients that were doing this with us, we're allowing us to engage with them and help them with this before COVID. They were really well positioned when COVID hit, because we were able to do the same service that we've always done with them, only from the COVID angle, bring the COVID perspective to it. But we had the planning models in place. We had a planning process with them in place. They managed their business and their finances by the financial planning process that we advocate. And so they were able to use that to adapt and make good decisions about how to deal with COVID. Now, that, it's interesting, because I was just talking to a small business entrepreneurs that were kind of firmly in that, never done it before and don't understand that value. And typically what I've heard, what I've always heard for years before COVID from many small businesses that are in that camp is, well, our business faces a lot of uncertainty. Our business is very dynamic. Our business is unique. We have all these situations that make it so that we can't possibly do a plan that would be helpful. Charlie and I have worked on a business that took that position for years and years until the shit hit the fan, and then we got it squared away, and now forevermore they go through a classic financial planning process. And so my message to those businesses who think you just can't do it because things are so uncertain or different for you, I can assure you that's not the case. It's just that you're not used to running the business that way, and that's okay if you don't want to, and you don't need to, so be it. But and when I told this, when I heard that from this particular business about how unique and uncertain their situation was, and why coming up with a plan didn't even make sense in that case, I pointed out to them that our clients who already managed their business with a process like this, they increased doing this kind of work when COVID hit and they hit a lot of uncertainty. They didn't decrease doing this kind of work. They increased doing this kind of work because they'd adopted it as a philosophy for how to manage their business. And, really when you're able to use this as a tool, financial planning for your business, and leverage it, it is times of uncertainty is exactly when you would do more of it, not less. So yeah, that's me getting on my horse, preaching to those small businesses about that. But that's what we do with businesses all day long. That is the core of where we're trying to go with the clients that we work with. And that's what we call advisory, is that kind of thing, the financial modeling and the planning for the business.
Yeah, I just want to jump in and say that, yeah, it's not that you can't run without a plan. It's that you never know how well things would go if you were utilizing that plan, and what that information would then, enable you to do. So yeah, Mark, do you have another article we can talk about?
Sure. My last article is about a product of the week. Last week we talked about the Tesla tequila. This week we're talking about Pizza Hut is selling a $150 weighted blanket that looks like a slice of pepperoni pizza. I don't know how much there is to say on this. I think it's a brilliant marketing move. And actually it's less than, for its size, it's 25% less than a normal weighted blanket costs. And I'm just curious what you guys think about this new pizza move by our good friends at Yum Foods.
Well, I can tell you, I think they probably hopped on the McDonald's bandwagon here, because I don't know if everybody knows, but like the Travis Scott meal at McDonald's, they had a bunch of swag that they sold. And one of the swag items that sold out the quickest was the chicken McNugget pillow. And I mean, it sold out in, we're talking about hours. And if you want to know if this Pizza Hut blanket had any traction, it sold out in a day. So they are sold out of these weighted blankets within a day. So I think you're seeing a real propensity of young, or at least the buying public now is really interested in these niche one-off items that shoe aficionados talk about this all the time. The most expensive shoes you can buy from like a Jordan 1 or something like that. The reason why they're so expensive is the scarcity value. There was only X amount produced. And you're talking about these one-off products like a Travis Scott McNugget pillow or a Pizza Hut pepperoni sliced pizza that, sells for $150. The scarcity of it, or let's even go further and talk about Supreme. You're talking about a white t-shirt with a red logo on it that sells for $150, or a crowbar that sells for $200 just because it has Supreme on it. I mean, you're really seeing the rise of brand be king here. And I think, when you have these interesting marketing ploys, it works. So I'm going to be first to announce here that TCA will be offering a 10-key pillow that will be for sale for, $500 over the next 2 weeks. The link will be in the description. All proceeds will go to me because I thought of it right now on the fly. And I'll give everybody else about $5 and a few glasses of wine off of it, but we'll see where we go with it.
Not going to be a toy car.
Well, we can do that too, I guess. Yeah.
Okay. Just checking. It's artificial demand. And, let me just, for anyone wondering, listening in, there's no shortage of the materials needed to make weighted pizza blankets in the world. Okay. There can be as many of those made as you can imagine. And so, I agree. It's totally a false scarcity, and it's used to just drive people to their product. And, seems to be working.
So AJ, what do you got for us?
Nobody else wants to talk about blankets, huh? All right. So my last article is actually from Small Business Trends. So this is an interesting article that I thought we had talked about, kind of the rise and the effect of COVID on the, I guess, brick and mortar kind of traditional businesses. This is a survey that came in that said essentially 85% of Americans plan to shop in store this holiday season, which I found surprising. And I think a good measure of when we've talked before on this, well, at least I have on the podcast before, that I think Q4 this year will really decide where we land in 2020. We can look at all the indicators we want on the S&P 500 or the stock market or anything, but retail is king really in this country because the GDP and economy is based on what people buy. So I thought it was interesting that 85% of Americans plan to shop in store this year, and that's coupled with over the last decade or 20 years that we've seen a rise or almost an overtake in holiday spending online. So I'd like to get your guys' take, as to whether or not you thought, one other part of the article that I thought was interesting too was the amount of, with 2020 being such, for lack of a better word, a shitty year, people are really, undertaking the holiday season in a much more festive way, I guess. And people were, me personally, I'm a big fan of Thanksgiving, and Christmas came early this year. So you saw Christmas decorations up in the store right after October 31st. I mean, even October 30th, they already had happy Christmas signs and just passed my Thanksgiving over. But Americans have really said that they want a festive kind of holiday season. And I think that they're looking towards Christmas decorations being more. So 85% agree that more than ever, the country needs the spirit of the holiday season. 57% agree that they're more emotionally connected to the holiday season because of the year. And when it comes to holiday spirit, 71% agree that holiday decorations in stores helped. So I'm wondering if you guys have similar, feelings toward that, or if any of those numbers kind of sound surprising as the amount of brick and mortar shopping that's happening.
It just, I guess I get the part where people are looking for something to hang on to, and if it's the holidays, I totally get that, because the more you go around, people are done with COVID. The thing that kind of worries a little bit about holiday season is, and I'm thinking Main Street America is still stumbling and trying to hold on to things. And I think the fact that no stimulus got done before the election, I certainly don't see any stimulus getting done for these to help these small businesses in the next few months. The holiday season for a lot of them is going to be make or break. For a lot of small businesses, that's one of their biggest times of the year. And I'm not sure what's going on the West Coast, but I know here in Ohio, we have a curfew. They're putting more, aren't going to damper that enthusiasm of people who want to go out and shop and celebrate the holiday. Because if we don't have a good holiday season, I think it's going to be curtains for a lot of these small businesses who are.
Yeah, I think this holiday season is going to be extremely important. One of the interesting parts of this article was that even though there's going to be this uptick of 85% of people going into stores, 75% of them say they will go when it's less busy. Well, if 85% are going in, how can you determine when it's going to be less busy? And to AJ's point about the holiday cheer, watch this space because you will see what kind of holiday cheer I can bring to the podcast. Be warned.
That's excellent. I look forward to seeing that because my wife and I and at our home office area, I mean, we decorated. Actually, Ethan, our producer, helped us with all that, and we decorated like that first week of November. I think we were in. So we've had the Christmas tree up and everything. So yeah, I can relate.
What about you, Charlie? Did you put up any Christmas decorations early? I know my wife did. I mean, the whole downstairs looked like Macy's threw up on my living room.
Yeah, I think everybody's looking for that, that to get away right now. And so that's the closest we can find to an escape. And so, in my neighborhood, people are putting up all their lights and getting ready early. And, it's nice, I guess, to see something different. I'll take it.
All right. Well, I hope everybody had a happy Thanksgiving in the audience. Thanks for watching the show, everybody. Make sure you drop us a like or a subscribe. And if you agree with anything we had to say or disagreed, you can leave a comment down below. Check us out every week. We post regularly. And join us next week for another episode of None of Our Businesses podcast. Thanks, everybody.
Thanks, everybody.
Oh.